Joining us now to discuss the Fed decision is Scott Brown. He is the chief economist at Raymond James. Scott, great to see you. Welcome back.
Nice to be with you.
So we have a divided Fed, and the jury is out as to whether or not we are going to get more cuts by the end of the year. What is your opinion?
Well, this isn't anything new. We saw the Fed divided as early as in the June meeting, where it was about a 50-50 split between those that expected to stand pat over the course of this year and the remainder looking for probably about a 0.5% cut. We know from the minutes of the July meeting that a lot of the officials were reluctant to lower short-term interest rates. And in this time, we've got a three-way split in terms of the dot plot, and the dots in the dot plot signal the expected federal funds target or the appropriate federal funds target for each of the 17 senior Fed officials. Mm-hmm. But not all of those officials get to vote on policy.
Right.
We've got 5 that really didn't want a rate cut at all, another 5 that want to stand pat for the rest of the year, and 7 who are looking for maybe another 25 basis point cut. So those divisions are still going to be there. It's not a huge range of opinions here. But it does suggest, there's still a lot of uncertainty, and the general view still is that this is more or less a mid-cycle adjustment, not really the start of a full easing cycle.
But we are in a world where other central banks are easing in various ways. The European Central Bank just did. The People's Bank of China has been doing the same thing. In Japan, they've been doing the same thing. Does that put more pressure on our own Fed to do more down the road?
Not necessarily. I think the Fed's got to do what the Fed's got to do in terms of the U.S. economy. It does have to take into account the implications of what it does on the rest of the world. And here, the real reasons for this cut were exactly the same that we had in late July. That is, there's trade policy uncertainty, which is having an effect on growth. The slower global growth is having an effect on U.S. exports. And in turn, these still pose some degree of downside risk going forward. Mm-hmm. So as long as that continues, you're likely to see the Fed, maybe moving towards lower rates again, either at the mid or late October meeting or in mid-December.
We saw a lot of volatility as the Fed chief was speaking. And so given what we've just laid out, what are your expectations for the equity markets into the end of the year?
Well, while the Federal Reserve officials are split, a lot of economists, a lot of market participants are split on what the Fed should be doing. Some see a real reason to ease a lot more. So I think we're going to see some degree of volatility here. I think we're still relatively optimistic that the economy is going to maintain positive momentum, no recession, at least through the end of this year, the early part of next year. But it really gets a little bit more clouded as you start to look to next year. So I think we're cautiously optimistic, I think, at this point.
Scott, thank you. Scott Brown with Raymond James.